If you're a real estate investor, speed is everything, right? Finding a fantastic deal is one thing, but actually getting the money to lock it down before anyone else, well, that's the real challenge. So today, we're going to dive into how one company, Capital Flow Solution, is built to solve that exact problem. And really, their whole mission is wrapped up in this one simple promise. We all know hard money loans are the go-to for investors because they're fast and based on the asset. But let's be honest, they've got a reputation for being kind of complex, a little intimidating. Capital Flow's whole deal is to give you that speed you need, just without all the usual headaches. Okay, so here's what we're going to cover. First, we'll open up the investor's toolkit they've put together. Then, we'll get right into what makes them different, the Capital Flow advantage. After that, we'll see exactly how they get you from a deal to actual dollars in your hand, and we'll finish up with the real proof in the funding.
So let's jump right into that toolkit, because we all know real estate isn't a one-size-fits-all game, so why should your financing be? Capital Flow has gone and built a specific set of loan products designed for how investors like you actually operate in the real world.
And this is really the question they lead with. What's your play? Are you flipping houses for a quick return? Are you building something brand new from the ground up? Or maybe you're acquiring a whole portfolio of rentals? Just think about it for a second, because they've cooked up a specific loan to match each of those goals. I mean, look how simple this is. It's so direct. For every common way investors make money, there's a tool made just for it. Flipping? You've got the flip and flip loan. Building? That's the ground up loan. Need to snatch up a deal fast? That's what a bridge loan is for. And for growing that rental empire, you've got the DSCR loan.
Let's zoom in on this fix and flip loan. Now, covering up to 90% of the cost is solid, but the real game changer here? Covering 100% of your rehab costs. That is huge. It means your cash isn't stuck in drywall and paint. It's free and ready for your next deal.
And for all you builders out there, this loan is designed to cover the whole shebang, from buying the dirt to putting on the final coat of paint. The money comes out in phases as you hit your building milestones, which, just keeps everything moving smoothly and makes sure you're not getting ahead of yourself on the budget. Okay, so you ever find that perfect off-market deal, but you have to close on it, like, yesterday? That's exactly what a bridge loan is for. It's that fast-acting, short-term cash that lets you jump on an opportunity right now, bridging that gap until you either sell or get your long-term financing sorted out. Now, for you rental investors out there, listen up, because this is a total game changer. A DSCR loan doesn't care about your personal tax returns. It only cares about one thing. Does the property itself make enough money to cover the mortgage? Let that sink in. If the property pays for itself, the deal works. It's that simple. All right, so having all the right tools in the toolbox is great, but how you use them, well, that's a whole other story. And that brings us to the Capital Flow advantage. It's all built on these three key ideas: speed, flexibility, and support.
And look, these aren't just some corporate buzzwords. Each one of these is a direct answer to the biggest headaches you get from old school banks, right? We're talking slow closings, rules that make no sense, and trying to get someone on the phone, forget about it.
So let's talk speed. 14 days. That's their average time to close a deal. Think about that. While traditional lenders are still shuffling papers around on day 45, you're already 2 weeks into your project. That's how you win deals. And they're doing this at scale, across 42 states. That's not just a big map. That's a ton of deep market knowledge and on-the-ground experience. That's what lets them build a serious track record. And by serious, we're talking over $100 million in funded loans. So you take that speed, that nationwide reach, and that kind of experience, well, it really paints a clear picture, especially when you compare it to the old way of doing things. And here it is, side by side. It really couldn't be clearer. On one side, you have the traditional way, slow, buried in paperwork, and totally inflexible. On the other, you've got the Capital Flow approach, fast, simple, and actually built for how real investors work. Okay, so we've heard fast and simple a lot, but what does that actually look like in practice? Let's walk through their 4-step path to getting your deal funded. No, seriously, it's this simple. 1, you send them your deal. 2, you get your terms back in 24 hours. 3, a streamlined underwriting process. And 4, you close and you get your money. That's it. 4 steps. No hoops, no nonsense. All right, so we've seen the tools and we've seen the process, but does it actually work in the real world? Let's get to the good part, the proof. Real deals, real results. Wow.
Just take a look at the range here. We've got everything from a $320,000 flip to a massive $1.1 million new construction project. This tells you they're not just a one-trick pony. They've got the chops to handle all kinds of deals, big and small.
And behind those numbers are real stories that solve real problems for investors. Remember that off-market duplex closed in 10 days? That's a bridge loan doing its job. That flip where they covered 100% of the reno costs? That's an investor keeping their cash free. And that rental portfolio funded with zero income docs? That's the DSCR loan making it happen.
And you don't have to take my word for it. Just listen to what their clients are saying. Here's one from Rachel in Florida. Closed my flip in 12 days, smooth and easy. I mean, that says it all, right? Speed and simplicity. So let's just leave it with this thought. The best real estate deals, they don't wait around. Being a great investor is only half the equation. Because when that next big deal pops up, the real question is your financing going to be the thing that holds you back? Or is it going to be the reason you win?